look at Nvda after the earnings, I guess.
Okay, so let's come back to these interactive charts. We've been discussing them all week. And let me close this menu here to expand the screen. And what we did was look at NVIDIA stock behavior, options behavior around earnings from a historical perspective. And the idea there was just, we don't know, obviously, what NVIDIA is going to do in the future. You know, NVIDIA did report earnings yesterday after the market closed. So right now, the indication in the pre-market that it's down 3.2% in reaction with that news. And what we did was look prior to this announcement, how NVIDIA tended to move around earnings, right? And how did the options behave? And price tended to price earnings. How did the stock tend to move after earnings? We looked at it from different perspectives, from the movement from close to close, from the previous day's close to the open, from the open to the close. Then we looked at extreme moves from yesterday's close to the high of the day, yesterday, or the previous day's close to the high of the day to the low of the day. So we looked at all these. Right now, we're kind of right here on the opening gap. So our indication here, if NVIDIA opens where it's trading right now in the pre-market, that would be down 3.2%. Okay, that's so far what we're looking at. And I'm just going to come here and click on these opening gaps. And here is a history of how it tended to move historically from the previous days to the opening gaps. And we talked about these are the magnitude of the moves. So on average, it moved plus or minus 6% in either direction. But we also discussed, besides the average, how is that those observations, distributed around those averages, because the average is a number, you could come to 6%, right? If all the numbers are 6%, they'll average out 6%. Or you could have very wide numbers, you could have zeros and 12%. So that's the question, where, how did it tend to move, even though we get this 6%? We saw that it is a very wide range. We had a large, from these historical perspectives, moved as much as 26% at the open. We also had unchanged, right? Like where the stock barely moved at all or didn't move at all from the previous day's close to the open after the earnings. And if we looked at all the observations and said, well, give me the number where half the moves were above, half the moves were below, that was 4.5%. And that's something that we discussed where we're talking about where the moves, even though we have this average 6%, the dispersion, the variability around that average is very wide, right? It could be, a lot of potentials there. And you could see even the median move is below that average, meaning that the average is getting skewed higher because of some potentially outlier moves, right? Like this one here or this one there. And we could just see here, this line here, this is the dotted line. That's the average. That's the 6%. That's over here. That's the dotted line. And all these bars, those are the historical opening gap moves. The green bar means that the move was to the upside. The red bar means the move was to the downside. But they're all pointing up to show you, to be able to compare the magnitude of the moves. And if it was always close to 6%, we would see a lot of these bars very close to that dotted line. But that's not what we see. We see, bars that go way above it, and then bars that go way below it, right? So you could see how choppy that is. And that shows you that there's historically, right? Historically, it had wide ranges, and it's been, either very low or very high. So there's a lot of risk there, in trying to map out or model the potential moves. We do see that also, that historically it tended to move up more often than down. So today that's, it is down, but you can see that more often it was up than down. So that's, one thing that we're looking today. And it did historically was skewed towards more positive than negative, but today it is negative. So that's the opening gap we looked at before. You could see that today's is kind of just falls really within that kind of range of the average median on the lower end. All right. One thing maybe we could look at is, since Nvda did report earnings, that they're out. Let's see what Nvda tended to do after earnings. So like the news is out. Let's take a look at another report that could give us some more insights. How Nvda tended to move after reporting earnings. So actually, let's look at the earnings moves over here. So these earnings moves, let's come down here. These are looking at the last 12 quarters. Last 12 quarters, you could see the opening gap. Now, keep in mind, the report we looked at before was looking at a longer history than 12 quarters. It was looking back 10 years. This looks at the more recent history of only the last 3 years. And looking at this, we see that at the opening gap, 55% of the time it was higher, 45% lower. So it's almost 50-50 there. If we look at the absolute average move, if we took all these and looked at the magnitude, it was plus or minus 7.9%. But the range was between 26 and 0. So you could see that very, very wide range, right? You could observe here, right? And another observation, I'm just going to come down here, is that the magnitude of the up moves seem to exceed the magnitude of down moves, at least from the very extreme. So you could see, like, on the upside, we had like a 26% move to the upside, while to the downside, we saw 5.6% move to the downside. So, and I think that was also confirmed with the longer term average statistics going back 10 years, where the upside tended to be more violent in magnitude of the move than the moves to the downside. So what about after the open? So now, let's say wherever it opens, our indication is, like, say over here. We don't know if that's going to change between now and the open. What did it tend to do after the open? So here we look at, we start out at the open, and then we measure to different reference points. So this one is from the open to the high of the day. So if we looked at historical opening moves to the high of the day, on average, it moved up 3.6%. What about from the open to the low of the day? So from the open to the low of the day, on average, it moved down 2.6%, which indicates a slightly bigger skew towards the upside, right? That the moves to the upside to the high of the day were greater than the moves to the downside. So skew a little bit more by 1%, right? So we could even see the best move from the opening price to the high of the day was 12.9%. The greatest move to the downside was 6.1%. So on the extremes, seems like a skew towards the upside, and also on the averages. It's a little bit more skewed towards the upside. It was less liquid towards the upside than to the downside. And then what did it tend to do from the open all the way to the close? So here we go. We opened up, we're opening it up wherever this is. Well, what did it tend to do then afterwards to the close of the day? Did it tend to drift higher? Did it tend to drift lower? Did it tend to sit around that opening price and close very, very near that opening price? So let's take a look at that. I'm going to slide down. That's this drift from the open to the close. And here we see that if we took the average of all the returns, you get a 0.8% positive return, which indicates that there's a slight, positive lean based on the averages. However, the frequency of the down moves, 55% exceeded the frequency of the up moves, meaning that the up moves here, you can see got pulled up, probably because of this one. Here's an 11% move. 11% move to the upside. And I'm just going to eyeball here. I don't have the stat, but if we just look at where it didn't open down, open down, 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 we just slide over here. Half of them were higher. Half of them looked like they went lower from the open. But the ones that went higher, you could see, that they went higher by a lot more than the ones that went lower. Okay. So, okay, here's another one here. So what about the move from the open to the close in either direction, right? Like how much can we move away from this opening price potentially? Right, so we open them, we don't know, go up or go down, but how much volatility did it have historically after opening, after the open and after releasing earnings? So let's slide down here. That's the absolute averages. So here we see from the open to the close, on average, it moved another 3.8% up or down, with a high move of 11.4 and a low move of almost unchanged. So still a wide range, and you can see on the average 3.8% is still a pretty decent amount of volatility. Almost 4% you got in either direction. Okay. And you could see here that the median return was negative 0.1, meaning half of the observations were above that, half of the observations were below that. And the average is 0.8, meaning that the averages got skewed a little bit. And that's because of this probably big game right here. And this is from the open to the close. What are the extremes in our data set? Keep in mind, this is in our data set. Well, best move to the upside was 11.4%. The worst move to the downside, 6%. So a very wide range. And you could see also here that using those extremes, the extreme move to the upside exceeded the move to the downside. So that's kind of the distribution of those returns in Nvidia, after reporting earnings. I'm gonna just let me see if I have a little bit of time here, Will, to look at one more thing.
Sounds good.
Yeah, let me see if I could find under tools. Let's look at events for a second. And under these events, I'm going to try to go to actually, hold on a second. I might be on the wrong page here. Trying to remember where I had that page. All right, let's look at this, the implied moves in Ivy Crush. So here, with this, let me see if I could look at the implied volatilities. So what this has shown us is tracking the 30-day IB. So it's tracking this 30-day IB. So if we had a 30-day constant maturity option, right, we have to derive that. So this is in a methodology we use to derive a synthetic 30-day at the money option constant maturity by using the data surrounding data with using the weighted average of the surrounding data with the expirations that straddle 30 days and all the strikes that surround the monies. If we track that 30-day implied volatility, this is what it tended to do prior to earnings and after earnings. So here, it's saying that on average, the day before the 30-day IB, implied volatility in 30-day constant maturity, was 58. You can see it was actually a little bit higher yesterday, 69.5. The day after, so the end of the day, after reporting earnings, which, right now we're at the open end of day, was 47.9. So there was a 16% decrease. That's the implied volatility in the 30-day constant maturity. What about 5 days later? Well, 5 days later is 45.9, indicating that it continued lower. The implied volatility continued lower. This using the last 12 quarters. And if we slide down here, we kind of could see here these are the historical observations. The orange bar here shows you how the implied volatility behaved 5 days, starting 5 days prior to reporting earnings and how it progressed. And then the green bar shows you how the implied volatility progressed after reporting earnings. So you got this 10-day range of the implied volatility, starting 5 days before reporting earnings and stopping 5 days after. Okay, so now we have all these implied volatility, graphs next to each other. And this is where we are right now. Okay, so you can see on the higher end of them. And now you see these green bars, how they progress. They don't look like they always just point straight down from the next day. Like this one looks like it dipped and came back up. This one kept going lower. This one kept going lower. This one started climbing up. So this one over here dipped, climbed up. So you can see that it's not always straight down. From the day after reporting earnings 5 days later, but it did tend to, if we took all those averages, tend to move lower. And if we wanted to look at those historical observations, here's the table. It shows you day by day what the implied volatility did, the averages, the max, min, and how the averages progressed, as you moved out further and further away from that earnings event. So I think I'm gonna stop here. We covered a lot today. So
Yeah, that was excellent, D. Very interesting week talking about Nvidia. We have one more day tomorrow. Awesome job, my friend. We will see everyone tomorrow. Have a great day.
Thanks everyone for joining. Stay safe out there. Have a great trading day. And